Hey, good morning. Good morning. Let me know if the audio is all good. Just want to make sure everything's good before I kind of break this down because I am watching something here on gold. All right, perfect. All right, what's going on, guys? So right here, actually, let me just break this down real quick. So gold, it looks like we're forming a 4-hour EBP now. Although I was already bullish on this because of the daily time frame, because the daily it just again from prior week high and the weekly time frame, it looks like we're gonna head up to this high. We still haven't met prior week high and maybe all-time highs as well. So good reaction right now in the 4-hour time frame. About 45 minutes to go. The 1 hour did close as a 1 hour EBP after sweeping Asia range low. We have a bunch of liquidity above market. So I am interested in this one, especially if we can kind of form this fair value gap. The honestly the most ideal setup would be this 4-hour bar closes in, but it's in 45 minutes, creates an hourly fair value gap, and then has that dip buy opportunity around, let's just say 43.63s. It is retesting this fair value gap on the 15-minute, but this is a very big fair value gap. So it would have to, for me, it would have to be a little bit more of a retracement. So let's put like, let's say the midline in here. Yeah, so pretty much around the midline. Because right now, like the risk reward would be hard. It would be hard to kind of like gauge an entry. But again, the most ideal would be this 4-hour bar closes as an engulfing post CPI and then go from there. Now, I talked about this yesterday actually in the Discord. I wanted to see this on NQ. However, overnight, we had SMT at the lows. So what is SMT? It's essentially when one market, let's say on ES or NQ, makes a lower low. And let me actually, um, where's the indicators? Let me see. Okay, yeah. So it's essentially when the market takes out the prior day low and or like some sort of liquidity pool or is hitting some sort of area, while the other is not like it hasn't hit it. So we had the prior day low over here on NQ. ES, we made a lower low in London, and then we kind of ripped higher since there. Um, so I'll be honest, right now I'm kind of like wait, like for NQ, I'm not really as bearish anymore until like we see some sort of backside move, which again we still could. The reason why I was bearish on this was pretty simple. Like if you go to the daily, we had the bearish EBP, and we have this volume imbalance down in here. Now, it doesn't mean it can't sell off, right? Because again, the market could open and then post CPI, this could just be a rally higher into this fair value gap, closing it, and then this could sell off. But right now, right, as currently constructed, I'm not going to short something like this on the pop up with a very big range. Even on the hourly time frame, we create this 1 hour EVP. And again, this could be just a rally higher before moving lower. But right now we're on something what I call typically the front side of the move, meaning the front side of the move is essentially on the retracement up into a key resistance. The market is still showcasing a bullish market, right? I don't want to get in front of that. So typically I'm not going to because it'll be also hard to manage risk on this. I mean, I guess you could put it above this candle as a stop, but like again, I want to see some sort of confirmation if I'm going to remain bearish bias. And I feel like that's kind of important as well because it kind of shows you guys that you can have a bearish setup, but again, you would need to see some sort of bearish condition as well. But yeah, gold. So yeah, but I'm primarily going to focus on gold to be honest, only because I think NQ right now, like, can it go higher? Yes, but right now we're sitting outside of resistance. This actually would have been a beautiful buy right here in London if you were awake for this. Um, and the reason being is like there's a beautiful sweep of liquidity right here. You had SMT at the lows, and not only that, you had this fair value gap on the 1 hour that you could potentially target. I love when I see bullish market or a bearish market structure. Like in this example, I love when I see bullish market structure with a clear upside objective. Like for me, obviously, this would have been a very nice objective, where we had this fair value gap here on the 1 hour time frame. We also have relative equal highs because this candle bar high is lower than this one, so we kind of have a little bit of liquidity pools as well. We have this imbalance, and this was a really nice entry where it was low risk, high risk to reward, and then you see just clean bullish market structure, and you also again had SMT at the lows. This is like when people ask me like what do I look for in terms of bullish market? structure, like this is ideal, where you have a clear target that has not been traded to. This fair value gap was not traded to. You have SMT at the lows, if you compare it relatively speaking to ES, and even ES as well, same thing. Fair value gap, you had this you had this 1 hour imbalance. This was beautiful. And then going into CPI, even though I personally don't trade the actual news of it, but it comes down to this fair value gap, continues the overall bullish market structure. So yeah. But that's a prime example of like when someone asks me what do I look for when I look for like reversals, or I will look for like, why is market structure important, right? Because the market structure is going to allow you to understand, how to enter the market. So if I'm looking for bullish market, if I'm bullish on an asset class and I see bullish market structure and again, for me, bullish market structure is simple, right? The market sweeps some sort of liquidity, boom, impulse push, fair value gap. You come in under retracement, right? This is another example, push up, market makes a new high, so swing low, swing high, swing low, swing high, fair value gap, and then again, the market just continues higher typically. But the key element to all of this is, again, the bullish market structure after some sort of run on stops and some sort of upside objective. That's typically going to be how I personally frame it. But it looks like that one already kind of moved. So I'm going to wait for this 4-hour EBP candle to close, to be honest, and then we'll kind of go from there. So this one going to close 10 o'clock. That's why I usually like start trading futures at 10, because I get to see the next 4-hour candle, unless I get like some sort of setup on the 6 o'clock candle. Funny enough, gold actually had a very nice this 2 o'clock candle going into London was as close as the EBP, and then 6 o'clock. Let's see if there was a setup. 6 o'clock. It never actually traded back into the fair value gap up here. So you have a 4-hour, just like in the YouTube video, right? 4-hour EBP, but this one's for a London session. Did not retrace back into there. Actually, it did. I think it barely just missed it. Right? Stop loss would have been candle bar 2, and then beautiful drop lower. So this was actually a nice little short setup here on gold during London session, going into like New York Open as well. But we'll see what happens. I'm gonna keep my eye out on this as well. But like for me, right, this candle, let's just say this candle closes and there's bullish imbalance, right? This is why I'm not gonna short something like this, because the market currently right now on indices is obviously displaying some sort of bullish market structure. So in order for me to be bearish on this, right, and continue based off of like, let's just say NQ, the daily EBP, I would need to see something where like maybe there's a fair value gap here. The market comes down, maybe pushes up, breaks back below, bearish fair value gap is created. And then you see how we saw this on the move up. I'm going to look for that on the way down. But until that happens, there's no reason to look for sells on this. Even though there's a daily EBP, right? And it still could play out because we still have a lot left in the day. But again, it's not something I'm going to go ahead and just short right there. Because I know a lot of you guys ask me like, hey, if you have like a level, would you short right away? The answer is typically most times no, especially if it's a 4-hour bias or a daily bias. I need to see some sort of 4-hour condition. So we'll see what happens. We'll see what happens. But I'm gonna require this close above here, because sometimes on CPI they just like they have like an impulse push up, then take out liquidity and then drop back below it. So I'm gonna kind of wait for this 4-hour close. So yeah. Yeah, so scope profile, I never traded to it, I had a limit there. Yeah, but this is what I mean. Like sometimes I'll tell you guys this one thing that actually makes a big difference in futures firms. That's why I'm actually pretty grateful getting into futures on the future side of the firms. I realized before a lot of times I would always look for a big move, right? And there's nothing wrong with looking for like really big higher time frame moves. But if you have a 4-hour bias and you can anticipate at the very least a little bit of a move below this low, that's an edge, right? Because this 4-hour EBP, the statistics on this is very high. That any EBP candle, whether it's 4-hour, 1 hour, you can look for these types of scalp moves all the time. They're there all the time. So imagine you get like, I know this one didn't get a fill, but imagine you get a fill, and like, let's just assume we got filled on this, right? Like it hit the fair value gap right there, and then candle bar 2 is your stop loss, right? Think about that. This is a 4R move, 4.5R. That is insane. And this is a little bit of a move. But the key is to obviously always make sure we're optimizing our stop loss and making sure we optimize our entries. Now imagine this was a really big move. That was like, maybe like it was clear on the higher time frame where the market was going to sell off. That's going to be something that could from 4R could ultimately be like 7, 8R move if you get a really, really big move. So we'll see if we get another one here at 10 o'clock. But again, I'm going to require this to wait only because on CPI, again, sometimes CPI, we run both sides. And I'm not, I'm not going to, I don't want to like, preempt it. Now, again, I know we have the 1 hour EBP. But the thing is, the 1 hour EBP, creating this fair value gap, let me just remove this so it's like a little bit more clear. For this fair value gap to be created, right, this hourly bar has to close, and that closes also the same time as the 4 hour. But yeah, the 30-minute is creating a fair value gap though, as well. 15-minute already has a fair value gap, but yeah. Okay, dollar yen. Let's see dollar yen. Dollar, honestly, guys, like I'm moving forward. I'm going to focus primarily more on futures. I think futures just has better moves overall, to be honest. One thing I've learned about futures as well, your risk to reward could be way higher, man. Way higher. Um, let's see the daily though. Now, honestly, it's just consolidating. I would not look at dollar yen yet, to be honest. I would because right now, like obviously the market has been inside a bullish market structure. I was thinking we're going to invert this, but then we kind of come back up inside the range after taking prior week low. So right now, when I see something like this, I'm going to wait for, I just don't see anything super clear on this, to be honest. So yeah, but I'm telling you guys right now, you're better off focusing on something like, I think ES and NQ is actually much better than gold. I think gold, and I'm talking about like in terms of like day trades, right? Gold is good, but the thing is with gold, it tends to chop around a lot. But within the chop, you can find scalping moves, right? So that's one thing that I've ultimately just worked on is just trying to what's the difference between a scalper and a higher time frame trader, right? It's just really the scalper is typically going to look for a quick move, quick reaction. Like how many times I've been up on trades 1.5 hour, 2 hours, and I don't take any of the profit, and then I end up either taking a loss or break even, right? The only difference between a scalper and someone who's like holding trades is just the whole time. The strategies are fairly similar. It's just how are you going to manage the trade? Like a scalper is going to take profit a lot faster, relatively speaking. EU 4 hour EBP, let's see. Yeah, but I don't like when I see like a bearish EBP then a bullish EBP. And the thing is, the problem is like okay, so always zoom out, right? So go to the daily time frame. The daily, it's just we're so high up into a premium. We are sitting at this fair value gap in here, but look, again, as a scalping model, maybe, right? Because there's a fair value gap there. Maybe you can take a scalp on this. I would not, for me personally, I would not take this as anything like all the way back to the high, only because look at this, look at current structure, right? Obviously the daily we're inside of a clear bullish fair value gap, but you're fighting against this 4 hour swing high, swing low, and we just took out the prior day high into this fair value gap. So now you see why I would not, like, let's say even if the scalp works and you get a little bit of a reaction here, right? But it's more risky for me personally because again, we're inside of a bearish fair value gap. We have this 4 hour bearish swing. And again, sometimes like can it just rip and keep continuing higher? Of course. But you got to remember like EU typically is going to be consolidating asset, right? We've had a big rally up, consolidation, then another rally. So now the continuation is probably not going to be as likely. So again, the next level is taking the EBP where you add it with context. Context is a little bit more difficult to learn. It's not really that hard actually, but it's just yeah. You typically want to have context when you add like when you take these types of trades. Now again, like let's just say you're someone who only wants to just maybe you want to turn this into a scalping model. Maybe you would wait for like maybe the market to come down here and then you just scalp a 1 hour, 1.5 hour. That's going to be up to each individual, right? When I see something like this, I automatically assume like I'm not going to try to like hold a trade to like new highs because it's just going to be it's less probable. Or I might just have a more difficult time sometimes doing that. Okay, let's go back to the 4-hour on here. Let's turn this one into NQ. Turn this on. So how do I manage losses, get into drawdown? To be honest, you know what it is? You have to risk a dollar amount where you're comfortable losing like 5 times in a row. I've talked about this before. The problem is this, man. Like some people, what they do when it comes to trading, like let's just say if I'm comfortable, okay, let's just say for example on 100K, let's say on the top step accounts, for example, right? If I know like my drawdown, I have to understand, okay, if I have a $2,000 drawdown, right, from the inception of the account, how much am I willing to lose every trade that if I lost 3 trades in a row, I would still be comfortable, right? For me personally, I'm risking about like, I would risk $200 until I build a cushion, right? So if I lose 3 trades in a row and I'm minus $600, will this affect my psychology? The problem is traders look at like the dollar amount that they're risking. Okay, if I lose this dollar amount on this trade, would I be okay, like mentally? And some people will be like, yeah, but the problem again is like you're not thinking of potential drawdowns. Number one, make sure to risk a dollar amount that if you lost even 5 times in a row, like just do something super excessive, right? If you lost 5 times in a row where you're taking really good quality trades, you're taking really good entries, good stop loss, good risk to reward, everything. If I lost 5 in a row, would I be okay? Like mentally. If the answer is like no, then maybe you should be reducing risk a little bit, and then that way, when you do go into an inevitable drawdown, because every single trader will go through a drawdown period at some point, right? Depending, some might be bigger than others, but yeah. But the reality is, you're gonna go through a period where you're gonna possibly lose money. That's how you preempt it, by making sure that psychologically you can handle what number this is going to be at 3 or 6. Like if I lost 3 times in a row, 5 times in a row, etc. Gold is definitely looking interesting though. I'll say this, if this candle closes a 15-minute, this could also be a preemptive entry. But this candle won't close until like about 13 minutes. See, like the problem is this, like for me personally, when it comes to like trying to find trades like this, what happens is like if let's just say you get in on this type of candle, while the 4-hour, the 1-hour is still, well, technically it already kind of retraced into the 1-hour EBP. So if we draw out the range divider from swing low to swing high, and we draw out the 25%, it already retraced close down, close almost into the 50%, but we'll see. This is what I don't like. I don't like entering on a 5-minute, 15-minute time frame, and then there's a fair value gap that's left behind. Because then what happens is this. Imagine you took an entry there, stop loss would be below the 15-minute EBP candle's low, right? And then mind you, like sometimes I would take this just to be like fully transparent. If this candle were to close. But the reality is like you're leaving the risk of the market of the next 1-hour bar to open up and drop down into this fair value gap, right? Because think about it. Imagine you enter here and your stop loss is going to be candle bar. Let's just assume this is closed right in here, right? The problem is this next candle opens up in 27 minutes. If that next candle opens up and has a power of 3 lower, your stop loss is literally right in between that next candle bar low, and then something like this would happen. And this has happened to me before, you know? So it's kind of like more of a discretionary call. But we'll see. This candle might not even close as an engulfing. It's like 11 minutes left until that closure. All right, market already opened up on indices. Let's go down to the 15-minute on here. And we'll just... I would for futures, but in my country, I can't find futures much cleaner. Like, what do you mean by that? Like, much cleaner in what sense? The problem with CFD firms, if you want to trade like NQ and ES, almost every single CFD firm has crazy spread on these. So for me, it's not really optimal. Now, typically when I trade futures, I'm usually gonna get in front of the charts around 10 o'clock, to be honest, because I always try to anticipate the next 4-hour candle. So usually I made the video about this, actually the last YouTube video. Yeah, every 4-hour candle on futures is gonna open up at 2 o'clock, 6 o'clock, 10 o'clock, and then 2 o'clock, right? And obviously you have other 4-hour bars, but I'm not really trying to, I mean, you could do it for Asia as well, but like the primary, like if you're trying to trade London or New York, or let's say you're only focused on New York session, 6 o'clock, 10 o'clock, and 2 o'clock. 6 a.m. Eastern time, 10 a.m. Eastern time, and 4 p.m. I'm sorry, 2 p.m. Eastern time. Those are going to be the main time windows that you could look for opportunities, because if you could anticipate the next 4-hour candle, you're typically going to have the directional bias for the session. This is something I'm actually going to talk a lot more on Instagram as well, and like Twitter and stuff, and even in Telegram. When you have a 4-hour bias instead of a daily bias, it just makes things much easier, because all you're trying to do is anticipate the movement of the next candle. Okay, and see, this is a good example of why I always wait for candle closures, because now it just flipped, you know. A very aggressive sell would be down to this fair value gap, but there's still like a, let's see, still another 24 minutes until this candle bar closes. But usually you're going to have some sort of pullback into some sort of fair value gap at some point. And then if you look at the 5-minute, like as a scalping model, it wasn't an EBP. We did have this little bit of a fake out wick to the upside. So sometimes there's going to be like some sort of run on stops, and then we're going to liquidate any people who chased off the open down into this fair value gap. That's more like a scalping model. Like even if you go down to the 1-minute, you see a market maker sell model. You see accumulation, manipulation. You see this balanced price range, right? This bearish fair value gap overtakes this bullish one, and then you typically we're going to have a reprice down into that area. Yeah, gold. See, and again, now the 4-hour probably doesn't look as strong. See, again, guys, that's why I always wait for candle closure. I know sometimes, like, especially early on, when I would see something look like an EBP, but then there's like 30 minutes to go, I would always still be cautious. And this is like where experience comes into place. Again, this could close as an EBP, or maybe not, or maybe this might even close as a bearish one. Who knows? Maybe it takes out the high and then closes below here, right? Closes below the opening price. Like that could happen. 23 minutes is a long time for the candle to form. Yeah, oh yeah, so destination hunts, right? Like, so only focus on the futures price data. The thing is with CFDs, right? The price data on CFDs are going to be different from every single broker. Like if I show you a chart on the euro, um, if I show you a chart on the euro, for example, if I show you 3 different platforms, you're going to see 3 different price feeds. And the reason being is because like it's not centralized. Futures is centralized. So if you go to any futures broker, you're going to have the same exact price feed. Like I can go to NQ on any I can go with it on what's it called? Tradeovate. I can go on it with let's say another broker like AMP, and it's all going to be the same exact price feed. In Forex and CFDs, it's not the case at all. Doesn't gold have a 1-hour EBP? Yeah, but for me, again, if I have a daily bias, I want to wait for a 4-hour. So I talk about this all the time in terms of my time frame alignment. Time frame alignment for me, if I have a daily bias, or if I think the market is going to have like push up to like a key higher time frame high, I want the daily down to the 4-hour confirmation. This has saved me so much losses doing this. It's just like one small shift, but it makes the world of a difference. Plus, gold is at highs, so like we also have to. I'm also just mindful that like on CPI, I think I talked about this in the beginning, right? Sometimes CPI can have a wick down below and then a wick above and then drop lower. That's why I need this 4-hour confirmation. If I don't get a 4-hour confirmation, even though the 1 hour is an EBP, for me to look for the next move higher above here, it's just not, yeah, I just need that 4-hour confirmation. And now look at the 4-hour bar. That's why sometimes, like when people ask me how do I avoid over trading, you can just show up 5 minutes before a 4-hour candle is going to close. Like again, obviously I'm doing this for the stream for you guys, but typically I'm not going to get in front of the charts. Like if I'm usually going to wake up around like right before 6 o'clock, or let's say if I even wake up around 6, right? I'm going to check out that 4-hour candle. If I don't see anything on the 4-hour bar, then I'm just going to wait until 10 o'clock or like 9:55, 9:50, 5 to 10 minutes before, and then instead of like watching this candle print. See, and look at that example that we talked about on NQ, right? This is a little bit of a scalping model. When the market is hitting some sort of resistance on the higher time frame, like think about it, right here. And this could actually set up for, I'm not discounting this low, by the way. Like if this sets up, I'm gonna shift my focus on here because this EBP on the daily is still, remember, this candle still forming. So yeah, so again, that's what I talked about at the early onset. As a scalp, you see a 5 minute right off the open. If you actually see the okay, let me just do this actually. So we have this breaker, right? This last down close candle before the move up, market breaks down. Or let's just even keep it more simple, right? Inside of market structure, we're inside of OTE, right? We're above the 50%. We hit this fair value gap. And we're inside of OTE. So let me just go OTE. If you guys aren't familiar with this fib settings, because I know sometimes you guys ask, it's 0.62, 0.70, 0.79. This is typically in bearish market structure, you're going to get a reaction, especially on the first test. So the market pushed up, and what did I say on the 5 minute? On the 5 minute, this is not an EBP, but this is going to trap a lot of longs at the open. Markets trap longs, and now again doesn't mean that the market won't continue higher potentially, right? But we're at resistance. It's going to reprice lower at some point. So when we go down to the 1 hour time frame, okay, let's go down to the 15 because the 1 hour candle is still forming. When we go down to the 15 minute, what we have this fair value gap that has not been traded to. So think of it from this level. We have a support level that has not been traded to. We have liquidity being swept at key resistance. The market is typically going to go from one area of resistance to another area of support. And that's why I talked about it here on the 1 minute time frame. And look at that. You also have the market maker sell model. I'm not going to get too advanced into that, but essentially like you have consolidation, manipulation, price drops lower. We have this inversion and BPR, and then market takes out that low. Scalp model right there. And again, on NQ, you can take these trades, no problem. Like this is what, yeah, it's a 50 point move in 1 minute. Like now I see why people trade NQ as a scalp because I used to not understand it, but bro, it makes sense because you can get these really nice moves in and out. Your day could be done right there. Yeah, now it's really selling off. I will say this is actually starting to look like a really big higher time frame sell model. So there's a lot of liquidity resting beneath here. So I'm actually, yeah, gold looks cooked, to be honest. This doesn't look like bearish anymore. Like, and even if this closes as an EBP, I could see this taking out all of these lows, to be honest. If this closes as a bearish EBP, all these lows and Wednesday's low is going to be like a potential target. We also have a little bit of a fair value gap down there. So if this closes, then this inversion would be like kind of like where you would look for the next power PO3. But this gold, I'm sorry, this NQ does look like a sell model. I like this 15-minute EBP that's forming, and now we just need, all I need for me to be like officially bearish on this is something very, very simple. There's a nice clear lows. We have this bullish fair value gap. But now we formed the first sign of a potential rejection. Now, when the 1 hour candle closes, and if this forms as a fair value gap, what you want to see is fair value gaps fail. So typically you want to see like at least some sort of reaction up into maybe like something like here, maybe this prior bar low, right? And then you want to see a big rejection with another bearish fair value gap. Think of it the same exact concept like this. This is like what I really love to see. Is you see how there's like, let's say in a bullish environment, when you have like a bullish fair value gap, the market retests it and then we aggressively sell off and create a bearish one. This is like one of the more powerful confirmation tools to get in on the marketplace and just to avoid the potential of like this bullish fair value gap working. But if this happens, now you have a clean run down into all these lows. And then the trade becomes, then you get these types of trades. When there's no support anymore, you get clean, easy price action. Like if this 15-minute candle were to close bearish and someone's like, you know what, I'm just going to take the chance and just say, fuck it, right? The problem with this is like you're at support. So this could easily run up, maybe stop you out. And then eventually we do something like that. So I'd rather just wait for the backside move once the support gets overtaken. Think of it like support turning into resistance. That's how I always like phrase it. Because a lot of like these ICT guys overcomplicate it. Just think of it as support turns resistance, right? Right now, we're inside of overall bullish market structure. However, inside of bullish market structure, we finally got our first potential rejection, right, of this overall swing, right? The bearish EPP candle. I'm not going to draw out the full range, but you get my point. So now this could be our potential lower high. Now, in order to avoid any potential headaches, you want to see that this bullish fair value gap gets overtaken. So maybe a little bit of a reaction. Maybe we come into this area, right, on the next candle, on the next 1 hour bar, which again, the next 1 hour candles in 15 minutes. And then essentially you want to see rejections, and then you want to see bearish fair value gaps start to form. Then you want to see every time the market runs up, we get stuff that make new lows. Now you have a beautiful opportunity to tackle the daily EBP candles low. But right now, that's what I'm saying. So you want to see like some sort of reaction up, failure, and then you want to start to see this start to get eaten into and slowly start to turn into a support level. Yeah, gold is cooked, man. This is exactly why I said on CPI, like you got to be a little bit more careful. You got to wait for the 4-hour confirmations. This is definitely cooked. There is a fair value gap as well, and we have a bunch of equal lows in here. So let me sync that. So that's this area right there. Now, again, I don't know if it's going to, I think it might just dump right away. I don't think it'll give anything. But now this would be a clean low resistance liquidity run signature. If it doesn't, so I'm just going to draw out that full range. So swing high, swing low, push up. This was a run on stops. This would essentially be like that resistance area that you would want to look for, that little bit of a push up and then drop lower. And then down into Wednesday's Asia range low, down into 42.23s. And this is like very likely going to close as a bearish engulfing. Now, what I also do sometimes, here's a little bit of a trick. When the market is very choppy like this, you could just draw the bodies of the candles right here just as a near-term objective, which puts us at Wednesday's low. But yeah, but this looks like I doubt we might even get a retracement on this. And now you're seeing that rejection. Hold on, guys. Let me hold on 1 second. I just gotta take this phone call. Yeah. You have it? No, what the fuck? You retarded? Nah, when you say that right now? Nah, bro. What is he talking about? We have, bro, we're barely getting by. We have credit card debt. I don't give a fuck. Some put his own money for the shit against us. What? I know he's retarded. He's like, I'm like, dude, you do realize like we're literally every single week everything is going into right back into expenses. Like, what the fuck? Nah, I'm gonna tell like no, it's just a no. Yeah, for sure. I know. This guy's retarded, bro. Yeah. All right, just put in the chat and then I'll go from there. Have it. All right, yeah, sorry about that, guys. But yeah. But there's two plays in here. So there's one on gold, especially if this closes as an EPP candle, very likely in 11 minutes. And ENQ. This one is like, see what I meant? Now you're seeing this being respected. Now again, we'll see how the hourly, because the hourly is going to form a fair value gap very likely in 10 minutes. Unless this completely engulfs it, then I mean, yeah, then you're kind of having a straight shot down to these liquidity pools. All right. So 2 plays here's that I'm watching for. But yeah, guys, I'm gonna have to get off. I have to take care of something real quick, unfortunately. Let me see. Yeah, I'll get off in like 5 minutes because I have to take care of something. So let me just go through any more questions. No. Gold buy? No. No, there's no fair value. Nah, for gold, especially as we close like as a engulfing, as long as this overall resistance hold, I think we're gonna get down into Wednesday's low in here. I think this is more of the play that you would want to watch for. NQ, same thing. I want to see this close. Now we're going to form a bullish fair value gap on the 1 hour. So we might have a reaction. We might have a reaction at this low. Now, yeah, so we'll see. Like for gold, for NQ, I want to see like if we come into that daily the hourly fair value gap, I want to see us push up and then boom, right? And then have some sort of retrace. And then I'll get in if the market over like pretty much turns this into resistance. Because right now in the 1 hour, there's potential support, right? Because the last thing I want to do is be inside of a market that starts to consolidate. Like I'm bearish now on this, looking for that EBP low, now that we're getting our first real rejection. But if the market starts to does this, and then we start to create bullish fair value gaps, right, and it starts to make higher, then obviously this is not, it's going to be nullified. Okay, this is going to close in about 9 minutes, but yeah. Yeah, Isaiah. So listen, any not just the EBP, but if I have a bearish bias, like let's say there's a very strong bullish market structure on the daily, right? I always wait for 4-hour confirmations. That I'm telling you, I get less stop outs because of that. And if I get stopped out premature, it's always because I tried to get in a little bit too early on an hourly time frame. Almost every single time that's the case for me personally. Okay. Yeah, the thing is this, man. Any trading strategy that you do with mechanical, like you definitely want to add some level of context. The context is what makes the risk to rewards much higher. For example, if you see a 4-hour EBP, let me try to figure it out. Let me all right, let's just say for example these equal lows, right? If you see an EBP in like here, right? I'm just giving like a random example. If you see the EBP candle like that, what happens is if you know that the target is here and you can get a 5-minute or 15-minute entry and you can have a very tight stop loss, when you add context, your risk to reward grows massively. And that's the point I'm trying to show you guys, because like you want to optimize for a like at least 3-to-1, 4-to-1. I'm telling you, with futures, it's 100% possible. You can get a consistent 3-hour move because futures moves like you have these really big moves in the marketplace. And if you can catch a 5-minute entry, think about it. If you caught this 5-minute, like even as an excessive take, right, on this 15-minute time frame, right? Let's just say you took this long entry here at the fair value gap, stop loss below candle bar 2, right? Look at this, man. That's a 7.7R. Obviously, this is CPI, but like even up to here, but even if you're just going targeting that fair value gap, right? That's a 3.86R. Even before CPI, let's just say you close right before CPI, that's a 2.46R, you know? But yeah, guys, I'm gonna have to get up out of here. Have to take care of something real quick. But yeah, if anything, I'll provide any updates. If I see a backside move on NQ, I'll post it inside the Telegram. But yeah. So I'll see you guys same time tomorrow. I'm gonna try to go stream around 9:45, closer to 10 o'clock. So yeah. All right, guys. See you guys in the Telegram.